Good morning, everybody. How are you doing? Delighted to have you here. I'm Nancy Hammerman, and this week our guest is Arlan Hamilton, founder and managing partner of Backstage Capital, as part of our series on the mindset of an investor today. Before we get started, just want to tell you all that we will be sending out a recording of the webinar. You can also find all of these past webinars now at recurringrevenueconference.com/virtual events. And we wanted to also mention the Q&A is where you put your questions in the bottom of your screen. Use the chat to introduce yourself. We'd love to know who's joining us. We'd like to know where you're from and what business you're in. And but do use the Q&A for questions. Again, wanted to remind you that we will be sending a recording. We're going to spend the first 20 minutes or so chatting with Arlan about Backstage Capital and about what she's doing today during COVID-19 and how her thought process is evolving. And then we'll spend some time talking about her book, It's About Damn Time. And then we'll open it up to some questions. So let's dive in. Arlan is the founder and managing partner of Backstage Capital, a venture capital firm dedicated to minimizing funding disparities in tech by investing in high potential founders who are people of color, women, or LGBTQ. Backstage has now invested over $10 million in over 100 companies. Arlan's also the founder of Backstage Studio, an accelerator in Detroit, LA, Philadelphia, and London. And she's the author of It's About Damn Time. She's going to be telling us more about the book. She's also has a podcast and has a series for founders that she is offering in connection also with her book. So Arlan, welcome. We're just delighted to have you here. How are you feeling these days? Tell us what's going on in COVID. How do you feel?
Sure. Thank you for having me, and thanks everybody for being here, for signing up, and for showing up. I think like a lot of people, it's going in waves. I think May has been much better for me personally and my family and friends than March and April were, just because you kind of get your footing a little bit more. I mean, this is just absolutely mind-boggling and surreal. And if you slow down at all to think about any of these numbers or any of these statistics on any measure, it can be overwhelming. But I think May has brought a bit of peace and sort of not acceptance, because I don't want this to become numbing, not immune to it, but there's a certain peace that I feel and a certain optimism that I've strangely had since the beginning of this. And I was grateful for that optimism. So I feel pretty good today. And I've been spending most of my time trying to pour into others so that I can kind of stay full myself.
Well, good. You traveled a route towards becoming the founder of Backstage that's not really conventional. You've set out specifically to build your fund from the ground up and invested in over 100 companies. And I love the fact that you mentioned you have some optimism going forward. But help us understand a little bit about your thought process and how you evaluate potential, how you think about innovation, and whether your thought process has changed since the first dozen companies you invested in and now that you've invested in over 100 companies.
Sure. I think a lot of the way I was able to come in from kind of nowhere here and have the impact, and have Backstage have the impact that it's had in so many ways is partly due to some of the ignorance that I still have and that I've sort of kept to a lot of things. And I mean that in a positive way. So for instance, I don't look at trends. I will study certain trends for a specific reason, but I don't normally just keep up with them. I'm trying not to be in any sort of bubble. I continue as I did from day one. I do the exact same thing today, is looking at the teams and looking at what they're able to accomplish with the limited resources they may have before I meet them, and what my no may mean to them versus what it would mean to others, and to see that sort of grit and determination. And what has changed though is it's a combination of me being more seasoned, seeing thousands of companies across all industries and verticals, which is a lot to take in, thousands and thousands in 5 years. And then also just me getting a little bit older. So I'll be 40 this year, and everybody gets older. Everybody's older than they were 5 years ago. So there's that combination of just my personal taste, and then also the work that I put in. I am more and more interested in companies and people who are looking to change complete systems, and who are looking to change lives, and to make not incremental change or impact. And it doesn't necessarily have to be a double bottom line or impact investment. That is not necessarily what we are, but I am just not interested in someone showing me how they can deliver the next cupcake to me in a faster, 1 minute faster than the next person, or put the 1000th filter over my picture. To me, that is just not as exciting. But people who are bringing large groups together, who are making the world smaller, who are making the world healthier, who are keep adding years to our time here on this planet, in sustainability, smart cities, and things like that are drawing the eye for me more so. And I noticed that. So it is a combination of, I often ask myself, because I try to practice a lot of self-reflection, I try to ask myself, would I have made the same investment, the same 12, 20 investments that I did at the beginning? Because, 130 investments is a lot to make, in that given time. And I don't know. I think some of them I would have. Yeah, I think some of them I would. I think some of them I wouldn't. But that's just like any other portfolio. I think you evolve. And if you're not evolving, what are you doing? So I am, part of my strategy is to stay rooted in what, and that's why I said ignorance before, that sort of innocence. We can say that as a better way of saying it, because I'm building this empire around me, and these groups of people who are doing all sorts of diligence. And just yesterday, I sent this space company that is completely over my head. I sent it to someone who I can just, with a ping, have them take it through the most incredible diligence with PhDs and this and that. But to me, where I stand is to find the people, to find the visionaries, to bring the people together, and then to know who, what I know and what my lane is, and just really double down on that. So I surround myself, and you can see that on my team, you can see that in our advisors, our investors, et cetera, certainly our portfolio founders. I surround myself with people who are doing huge things and who can do things that I cannot do. And I think that's part of the magic of it.
Well, let's dig into that just a little bit more, because in your book, you do mention that you realized that time is your most valuable resource, and that you're in the business of risk. And yet you're juggling many, many things, not just your portfolio companies, your investors, and then all these other activities, your podcast, your book, and so on.
Yeah.
Describe to us how your time looks like. What is a typical day for you and for your team, and how does your team communicate?
Sure, and it's different, not slightly, since COVID hit. So the last 3 months have been slightly different. The main difference is that I'm usually out. I'm usually traveling 70-80% of the time and doing all of this like that way, and now I'm not. But yeah, I think so. there are no typical days, which I'm sure you're used to, but I will spend 2 or 3 days per week during the week on activities like this. Like I will have conversations, I'll do virtual events, I'll record podcasts, because people may not understand the strategy that I have, but I think my strategy is being the results of it are pretty undeniable. There are people who, and I'll definitely answer your question, so I'm not going to go too far off on the tangent, but I just want to kind of lay this foundation of, there are people who ask aloud why I speak so often, or why do I have a book, or why do I do this, who are questioning that, who themselves have their jobs because Backstage exists, and they just don't quite get that. They don't quite get the cultural impact that Backstage has had in the last 5 years. So what I'm doing is I'm playing whatever dimensional chess you want to call it. I am playing different ways to get to this outcome of change. So in a given day, in a given week, I'll do 15 to 20 podcasts, conversations like this, et cetera, et cetera. My team has always been remote, so that did not really hurt us during COVID, thankfully. We have my business partner, Christy, is in Oakland, and then we have people in LA, Detroit, I'm in Los Angeles, New York, London, et cetera. And our team is very small now. It's a skeleton crew. And so every morning we will get together on Slack and on text, and we will do stand-ups in our various lanes here. And right now, as I speak, our head of deal flow, Brittany, and my apprentice and chief of staff, Chacho, are doing office hours with probably a dozen founders who are in a certain stage. So we do them by stages. They're doing online video office hours in small groups, and they're just pouring into them, because this is really hands-on. We are not only serving our portfolio, which is a huge portfolio, but we're serving the 98% of companies that we did not say yes to, who are underrepresented, underestimated founders. And then beyond. I mean, a lot of my conversations are with, I don't want to say traditional anymore, because hopefully they're not traditional, but with founders that we wouldn't necessarily invest in because of our standing. So I'll have that, and then I will, this morning what did I work on? I worked on connecting, I'm an advisor for the Oxford Foundry, and I'm also I've also provided the first scholarship for a Black student at Oxford in their whole history. And so I connected one of the 9 founders that I spoke to yesterday at Oxford to Flexport to help them get some PPE from Germany to the United States, because they have an amazing company that they're working on. Did this in the morning before speaking here. I donated to a queer magazine that was going out of business to help them stay in business. And then I am going to be interviewing T-Boz from TLC later today. So I was working on getting that, the group TLC, getting that worked out. So my day is just so many worlds combined and put together, and of course I'm working on the book and getting the book out to more and more people. So it's I run 3 companies: Backstage Capital, Backstage Studio, and Arlan Was Here LLC. I run them all every day, and have an amazing team. And you mentioned Jamie earlier when we were talking backstage, I'll call it, and she's my EA, and don't know what I'd do without her. And so I probably yesterday morning I put Mark Cuban on the Zoom with 12 or so or 10 or so of our portfolio companies to talk about PPP. There's so many acronyms. PPP. Had him on for 30 minutes to talk stuff, talk about that from an op-ed that I did at Fast Company with Gusto last week. So it's just nonstop, and most of it, what people see is they see the Instagram posts, they see the headlines, they see me showing up everywhere on Twitter, and they're like, why? That's what they see. But what's happening behind the scenes is I don't even know the degree of the dimensional chess that I'm playing.
Well, it's a little overwhelming to hear all the things that you're juggling, but I congratulate you.
Thank you.
Tell us a little more about sort of this opportunity to democratize venture capital, what that's meant to you, how hard has that been,
Mm,
um, and how your approach of being seen and being heard and having the founders that you invest in being seen and being
yeah,
heard, and why this is such a strong impetus for you
yeah.
that is really so core to, I think, your mission.
Yeah, I mean, I wrote 256 pages about it, but I will, just to put it into 2 minutes, a few years ago, 7, 8 years ago, I had decided I wanted to start a company in tech, a tech company, because I'd started all these smaller things and magazines and things like that were amazing, but it just didn't work out financially, and I didn't know why. And then I discovered Silicon Valley. I discovered this whole world, and it was just really like finding my tribe, finding who I was deep inside. And I just felt such a kinship to this world. And in that research and in talking to people very innocently, like, discovering the promised land, that's when I found out, oh, wow, when I looked in and I saw the Mark Zuckerbergs of the world and the Aaron Levies and all of that of the world, it didn't mean much to me, because I was so used to having a very diverse group of friends and colleagues, and I had just worked in, rock music and pop music, so I was surrounded by all types of people. But then the further I delved, the more I understood that, wow, there are so few people who look like me, who are known and who are thought of as expert, and who are legendary. Not that they don't exist in tech or in investing in that VC world or beyond, but that they are just relegated to the sidelines. And I wanted to study and understand why. So I left the idea of starting a tech company behind, and I said, let me dive into building let me go into what the systematic problem is. And table stakes was being able to write a check. Now I'm saying all of this while at the same time truly having housing insecurity, homeless at times, on food stamps at times, have no money to myself. So I'm saying all of this in that world, but also knowing personally, it's not going to come from pulling out my checkbook, and it's not going to come from going and working at Wall Street. It just won't, that won't make the effect that I want here. So I said, I studied and I studied and I studied and I did what I could. And I said, you know what I'm going to do is I'm going to break into venture capital. I'm going to break into this club, because I've been inviting myself to the table and to the party for my whole life. And that's what I'm going to do here. So the pulling together of Mark Andreessen and Brad Feld and Ellen Powell and Aaron Levy, who I mentioned earlier, and Chris Sacca and all these people, and pulling them together over time, years and years, pulling them together and saying, you invest in me and I'll go out and showcase, not necessarily only find, because they are already there, but I'll showcase and highlight and put the spotlight on these founders who already exist and who are, by the way, building companies for global good. I mean, this is not just, I think we make the mistake that if someone is a certain person, they're going to, for some reason, we think that if a Black woman starts a company, she's starting a hair care company, for Black women. It's just the only thing that she can do. And they're starting global companies in a lot of cases. And so I just think that, knowing where we're going, just a few years from now, we'll be a majority minority in the United States. Knowing that we want to compete with the rest of the world, at least that's what we say. At least that's what we say. But then you have venture capital with some of the most capital, the most money, the most power, influence, which is so homogenous sitting there. To me, it just didn't make sense. And I had so much, again, I go back to this sort of ignorance, innocence thing. I use that to my advantage, because I say, what I don't know is probably helpful to me, because I don't have to be stringent in my thinking. I don't have to be boxed in by what worked before, so it'll work this time. That's exactly the point. Well, it wasn't really working the first time. That's why you have very few people who have billions of dollars or and there's nothing wrong. I don't personally think there's anything wrong with being a billionaire. I just think that there's a lot more fun you can have as a billionaire that I would have. It would involve a lot more people, right? So there's just this spreading of the innovation and the accolades and the credit that I think needs to happen. So instead of I started writing about it. I wrote blogs and they went viral, and I talked to people about it. And I said, this is great. And it's putting a dent in, but remember, I don't like incremental change when it comes to something important. So I said, what is going to mean the most here is I have to have table stakes. I got to get in the game. I need someone to back me. And I think I even thought about the idea of a poker game where you do have some people who are backed by other people who are in the shadows, who are rich and just want to see it play out. And I said, okay, I learned about Mark Andreessen. He seems interesting. Let me get in touch with him. Let me find a way to get in touch with Mark Andreessen, and let me find a way to get investment from Mark Andreessen. Now, Mark Andreessen has invested 3 times in our fund, across smaller funds. And he was just a flashcard to me in 2013. He was a flashcard while I was teaching myself what venture capital was. And today, he is one message away from answering me whenever I'd like. And so that's what I did. I just repeated that over and over and over again. And today, I called the fund Backstage because my intention was to be in the shadows and back others at the poker table. What happened is that in 2016, that was blown out of the water when press learned about what I had done in that year, from 2015 to 2016, after I got my first yes, what I had done and what I was planning on doing. And they started framing this narrative of from homeless to VC and from this to that. And at first I was very, very against it. And I just hid and I went under the covers and I said, no, no, no. And then I started getting messages from Black founders and from women, white women and Black men and all sorts, Latinx founders all over the world, all over the country, writing to me in the DMs and in emails and on different platforms and saying, you're saying things I can't say. I don't have the platform to say it, and I don't have the freedom to say it. You represent something that I want to say, but I can't say it. And you're doing what I want to do, but I can't do it. Please keep going. And I thought, well, this sort of selfishness of trying to stay, being precious. I don't want you to know my story, just needs to fade away. And so that's what I've been doing, because I know what happens every single time I have a conversation like this. I know what happens when I release a book. I know what happens when I stand up and I have a stance on Twitter and I say, and I go and I, rail against something that I don't believe is right, even if it means I'm going to have, all of Paul Graham's people running at me and yelling at me if I don't agree with him that day. I'm going to say it because, the reason I say it is because I've watched white men say it to each other all day long. And I have just as much confidence and just as much courage, if not more, than they do. So why would and I have the right to say what I believe. So why can't I challenge a Paul Graham or even a Mark Andreessen? I've done that. He's invested in us 3 times. I've challenged him. I've challenged Mark Cuban multiple times. He's one of our largest investors. Why can't I do that for myself and on behalf of others who cannot?
Mm-hmm. Well, give me some specific examples, though, because I'm familiar with Avisari and Sky Kelly. I'm familiar with Blendor. I'm familiar with a bunch of companies in your portfolio that I admire. Yeah. But talk to the audience. Tell them a little bit about some of the companies and the founders you're most excited about. And also, there's something you said in the book about you like founders who are hungry, not thirsty. And I want to sort of understand what you really mean by that.
Yeah, well, thirsty kind of, the kids say thirsty, and any kid who says it, or any teenager or adult who says it, they took from Black culture. But that's what you say when someone is being needy and greedy and kind of begging and just not having any chill, right? Hungry, so they say thirsty for that. You're thirsty, Hungry is more like there's a fire in me, there's a passion in me, and it's very it's regulated and it's strategic and it's fueling my forward motion. And that's what I look for. And so it's a play on words, and that people can get in a certain way. There are so many founders and companies in our portfolio who I don't have a favorite, and people ask me that all the time. I don't have any favorites. I don't have any ones that I think are going to do better than the other, because I think, again, we treat our founders kind of equally across, which is a little counterintuitive to venture, but it's part of our strategy. You mentioned Stephanie Lamkin. She is the CEO, founder of Blendor, founder first of Blendor. And Stephanie, just briefly, has this, but the audience may not. She's a Black woman. She's a queer identifying, and she has this incredible story where she was born to a mother who was addicted to drugs. And she'll be the first to tell you that that's not the story of every Black person. So please don't, I know the Lifetime movie is coming, but in her case, it happened. I believe it's Baltimore, but it might have been somewhere else in that area. And she had an aunt who taught her the love of coding and kind of got her back on this track. And so she became a coder, and she applied for all these jobs in multiple places because she just had that same sort of innocence. I want to work at Google. I want to work at XYZ. She went to Google, for instance. This is one she talks about publicly, and there's plenty of others. And at the time, I forgot how many thousands of employees they had, but they only had some number, less than 20 Black engineers. And she went there. She had gone to MIT and then maybe Stanford, she went to a second. She went to MIT and then another one. She's everything on paper you're supposed to be for this. And they told her she was not technical enough at the time. This was a few years ago. They said she's not technical enough. So they wouldn't even give her an entry-level position to even kind of quantify that statement, to say, well, you're not technical enough, but you have enough, foundation, so we'll put you here and let you grow with it. They said, you're just not technical enough. We will call you if a sales role pops up. And this is where they're also publicly saying there's a pipeline problem. I'm sorry, we can't figure out a way to get more Black people here, especially engineers. And she just walked through this process knowing that she was there and they didn't accept her. So this happened to her a few times, and instead of just sort of packing up and going to another profession or doing this, she said, let me try something. So she put together some resumes that were from Black people who had, let's call it colorful names. I don't know if that's probably a terrible way of saying it, but they had names that it might, like if your name is Mario, I may assume you're Italian or Latinx, right? These were names that people were assuming. She changed those names to white sounding names. And I believe she changed genders as well, from women to men. And she did some A/B testing, and she applied at different places with sight unseen. And there was a percentage that, she'll have to show you the percentages, but there was an overwhelming percentage of resumes that were accepted from the white sounding names. They were exactly the same resume. But when Latasha walks in, they assume maybe I don't want to say yes to that. But when Eric Doherty walks in, maybe and I pulled that from a lawyer that I had, maybe he walks in and, oh, well, you went to MIT. Well, let's talk. So she took that again. She could have just burned it all down. I would have. I mean, she was just furious, but she took that. And she said, I'm going to code. You say I'm not technical enough, Google. Let me go ahead and code the first version of the app that does what I just did in a pilot testing, and it does it automated. And that's what Blendor. Bias. Yes. Yeah. And so all of that, I mean, the whole story is incredible. I remember talking to her in 2015. I met her in the spring of 2015 before I had any money. I was homeless at the time. She did not know it. And I remember meeting her 5 years ago and just hearing this story and just looking at her and just saying, you remind me of me. I mean, I can't believe people are not taking you seriously. I just don't understand it. Within a year, I had found a way to invest in her. And we're great friends now. And she is just incredible. I mean, she has a ton of corporate clients. She has, you know, she's done the whole thing where she's raised $1 million plus whatever, but because that's some sort of metric that we say Black women have raised. But she's just, I mean, look at what Google missed out on. What they missed out on, and Google, you can slap any name, any major name on that, and she's had those experiences, and this happens over and over and over again, and it happens mostly in the shadows. And then you have someone like Jessica Matthews. Do you know Jessica from Uncharted Power?
No.
The fact that people usually, when I say her name, do not know her, in like Silicon Valley or in, you know, boggles the mind. Jessica Matthews is what you want Elon Musk to be. Okay. Jessica Matthews is Nigerian born. She lives in New York. She wants to be the first unicorn to be based in Harlem. She has built, she works in renewable energy. She has first invented a soccer ball that as you kick it, it generates energy. That was the first thing. So there's a picture of Obama playing with the soccer ball several years ago. She said, okay, that's awesome. I went through the pains of that, made that right. Sometimes it didn't work. Sometimes it did. Let's see what happens next. Instead, so she said, okay, I'll dabble in a piece of luggage that as you roll it through the airport, it charges your phone. I'll dabble in that because it's easy. That's kid stuff. She said, no, that's not big enough. What do I want to do? Now she's working on smart cities and grids for entire cities across the world. Disney has just backed her. And Magic Johnson just came on just recently as her latest board member. I've invested in her twice. But again, people don't know her. She wants to be she's going to have, I believe she'll have a unicorn. That's not how I measure things though. I just believe she will. She also calls herself the combination of Bill Nye, the science guy, and Beyonce. So she also does all of this, to steal from another quote, in high heels backwards. Okay? She is just fabulous. And people don't know her, and she's this brilliant CEO, inventor. And I'm so grateful I found her in 2015. I didn't have any money, and I missed out on investing in her the first round where I was less than a $10 million valuation. She's in 9 digits at this point.
Wow. But
finally I was able to invest in her, thankfully. And because we've, just worked so well together, I have a preferred position, but that took a lot to get. And I look at so many, I'll just do one more. We had I won't say the company, but we had a company, and this is just kind of talking about the fund itself. We had a company that in 2016, February, I remember it very vividly, I wanted to invest $25,000, tiny amount. And I couldn't get anyone to back it. They had a liquidity event last year that would have entirely returned our entire first fund it basically 40x to 50x from just a liquidity event. It wasn't even an exit. This happens over and over and over and over because people, they don't want to look beyond what they already know. And I say, let me do it for you then. Let our team do it for you. Let our founder, and we'll go for it.
Well, but also one of the things that really comes through in the book is that when you don't know something, you do your research and you know that there's information out there. You're not afraid to ask questions. You're not afraid to get a no. You'll just keep pursuing. I mean, that's one of the things. Let me just get back for 1 minute because I then want to move over to your book. But in terms of advice to entrepreneurs who are on the phone today, many of them have asked us the last few weeks about runway. What are you telling founders these days in terms of runway? What are you telling them about revenue projections? And given that the world has changed, what are you telling and what are you seeing in terms of valuations? So those 3 things: runway, revenue projections, and valuations.
Well, you can imagine with the portfolio the size that we have, and with everything, and with us personally having to downsize in March because it hit us just as hard, we had to kind of do things at scale. And so what I started to do is just kind of throw myself into understanding what was going out there. I was, I've been studying. That's what I am, a professional student. So grand scale runway and valuations are in some cases are halving. Like for instance, if you're going out in October for whatever reason for capital and you were at, a 16 pre, you may be able to, and you were halfway there, you didn't get away, you may be able to get away with a 12 pre or a 10 pre. It's not half, but it's, you are having to make those sorts of sacrifices and then make the decision if you want to even raise in that sort of climate, or do you find a different way to bootstrap and wait it out for another time. People who of course had money in the just held for a rainy day, which many of our founders did, including Jessica, including Stephanie, where you have some for a rainy day, and so you have a little bit going for you. When it comes to runway, I know that. So what I'm struggling with is that our founders, because of the issues that they deal with on a daily basis, because of the reason I started the fund, it's not as easy to compare them to what's happening across the board in venture. So even the National Venture Capital Association, when they put out their white paper a few weeks ago, did an entire section on, okay, all of these things apply, but then also make sure you understand that as bad as it is going to be for all founders, it will be, doubled or 10x that for founders of color, for women, et cetera. Yeah. And that's all of our founders. So we have, it's not so much me telling them, it's them. It's sort of what I know from that portfolio is that we have companies who have found a way, because they were not having money thrown at them from the system this whole time for years. They were not rocked as hard as others I've seen. They didn't have as far to fall, if you will. And so you sort of kind of put your thinking cap on, they put some strategies in place. We've made sure that they know everything they possibly can about all of the stimulus that's available to them, and to just make that decision if they should take it or if they shouldn't take it. And then you have we have a couple of companies that were able to raise. We have one company that was able to raise $10 million. Like, they pulled the drawbridge up seconds before this all happened, or like as everybody was closing down, they were pulling the drawbridge up, and thankfully the timing just worked for them. So they still were hit hard. They still had to furlough a lot of people to keep the company together, but they were able to make that happen. So I'm always going to be, COVID or not, I'm going to be of the mind that as much as you can bootstrap, as much as you can save as much equity as possible for yourself. If I were to start a company today, and I do have a company that I own 100% of, that's my latest company. I'm of that mind that because you don't know what's going to happen next, we don't know how long this will last, we don't know how this will affect us. This is where like entrepreneurs have to find their stuff, what they're made of. This is it. Doesn't mean you have to have a superpower. It doesn't mean that you have to be like, you're no good if you can't figure it out. But it does mean like you need to kind of take a self-reflection and say, why am I in business? Why am I doing this particular?
Why am I doing this?
Yeah, why am I doing this if it can't withstand certain things, right? And can I pivot this in a way that is elegant and efficient and makes sense, where I kind of have the least damage done? And those are the conversations I have with founders every day across all genres. I keep saying genres, across all industries, across all verticals. And we're talking from companies that are, they've raised 500,000 and they have, $4 million valuation, up to people who have $200 million valuations, and they're taking in $10 to $50 million. And
are you writing checks? Have you been writing checks during COVID?
We have not been writing checks during COVID because we don't have any dry powder. we were going into a raise ourselves. We were working with actually with a debt company that we were going to have a 20 to 80% ratio of equity to debt. And what we were going to do, our new iteration was going to be, or one of our iteration, not new, not just one of our funds was going to be that we would be able to offer you, let's say 200,000 in equity and then 800,000 in debt, and they would cover the debt. And it was going to be something like a $40 million fund. And, we were on our way to that, and then COVID hit and it just dried up. We are still having this conversation, so we picked it back up just in May, and they've kind of changed what the ratio needs to be, because that was like, they're like, it needs to be more closer to like 40-60, 50-50 for us to feel comfortable. And then we also are looking for like a really great underwriter who can make sure that, like, for us to underwrite companies, so they need to see that in us. So that's the longer answer. The short answer is we don't have it. We don't write checks simply because we don't have it. If we had it, we would be writing checks. This would be when we would say we go all in. This is when we would take the most risk. This is when we would back the riskiest of the risky today. That's what I would love to be able to do. But our circumstances don't allow for it. That's fine. What we do instead is, for every dollar that we would want to put in, we try to put $10 worth of resources and amplification and all of that. So that's why we have, like I said, Mark Cuban on the line with 10 of our founders yesterday. That's why we have 190 something investors on a list of people who are actively investing for the ecosystem. That's why we had Investor Week 2 weeks ago, where we had 36 of our 130 companies meeting one-on-one with dozens and dozens of investors and that turning into something. So we kind of try to punch higher than our weight in a huge way, you know.
Okay.
I personally think Backstage should have a $50 to $100 million fund today. We should be making very risky small check investments right now for people for underrepresented, underestimated founders who can prove that they can do so much with so little right now. And yeah, that's what we should be doing. And then we should be doubling down that same fund on some of the investments that we've made that we know are on their way to doing big things. And just leaving that allocation on the table has been pretty heart-wrenching.
So with the time left, Arlan, wanted to just segue here into the book, because it's a fascinating book. I just found it completely a page turner, totally authentic. It's funny, it's sad, it's got ups and downs, it's very real. And as a former publisher and editor myself, I can say the best way to learn about a book is word of mouth. There's no talk show or publicity you can have that's going to sell a book better than word of mouth. So I know that releasing a book in early May of 2020 is probably not the best time, and it's not like people are going to see it in the airport bookshop. But tell folks in the audience a little bit about why you wrote the book, what the book has meant to you, how you felt the day it arrived and you had it in your sweaty hands, and what this journey has been of talking both part autobiography, part how-to, part sharing and imparting the knowledge that you've gained, and being completely straightforward with people about both your situation, from food stamps to the 5-star hotels to being on the cover of Wired magazine. Explain to people why you decided to write this book.
Yeah. Okay. So it's a lot of questions, but I hear you, and you are a former publisher, because you described it perfectly. I decided to write the book because starting in 2016 with that press that I started getting, and just after I was on the cover of Fast Company in 2018, things just went haywire. I was just getting so many inbound, I still do every day, get so many inbound messages, and I read as many as I can, and I respond to as many as I can, and I try to make things happen with them. But the truth is, and the fact is that I just don't have the bandwidth to answer all. I don't know if any of us do. And what I noticed was like the number one question people were asking was, will you invest in me, or will you, you know, meet with me to see my company? But the second most common question was, will you be my mentor? And I think mentorship is really important. And I think sponsorship is really important, but there's just no way, right? And so I said, well, one of the ways that I was able to get where I am and do the things I've done is just simply just studying and studying. And what did I study most of all? Books. Brad Feld, I have all of that, you know, all of these books actually read. They're not just for like show, you know. At Brad Feld's books, not only venture deals, but his startup community book that he co-wrote was so instrumental. Oprah's books have been so instrumental. Richard Branson and all of the investor books, you know, that are just so dense and are as references. I said, those were really helpful to me. I can't overstate how helpful they were. However, they were all written by white dudes for the most part, and dudes, right? Like for the most part. And that's great. I got the information. Most of them that I just, you know, said to you are either investors in my fund or I have some connection to them now. That's fantastic. And you'll see in the book that my first music gig was with a 5-piece Norwegian pop punk band. So there's no aversion to white dudes, you know. But I said, how cool would it be to have this mentorship in a box from me, from you know, from faces and voices that you don't see in business. And I made it sure. I said when I signed the deal with Penguin, I said it has to be in the business section. I won't do it if it's only in the self-help section, or if it's only, you know, where you want to relegate me.
Yep.
It has to be in the business section, because I want the entrepreneurs who need it most to be able to find it.
Yeah.
And so that has just been such an amazing experience. It came out May 5th. It sold several thousand copies so far. I'm incredibly happy with that. I'll never know what it would have been like to have a full-on 6-month tour like I was supposed to have with it. And
yeah.
I tend to, you know, because I got over stage fright, which you read about, I tend to kind of really get the crowd going, and I'm sure they would have, you know, raced to buy the book, but I'll never know. But I have had the most amazing time going around the world from my home office the past 3 months, talking to people about the book, especially the last month. And it's just been holding for the first time. There's a video on my website. If you go to itsabouttdamntime.com, there's actually a video of me unboxing it. So you can see what it looked like in my sweaty hands.
I saw it on Twitter. It was great. It was
great.
great.
So you can see it there. And you mentioned I know we're running out of time, so I want to make sure that we get this, if you don't mind. You mentioned that I have the event that I'm doing. I decided to do like an 8-week mastermind for the book, and usually you charge for that. I'm not charging for it because we're all at home, or we're all in positions where we want to kind of have a breakthrough or do something in the next couple of months. I want to help with that, with using the book as a guide and using these extra guides that have been built around the book that we all get to download for free when we do it. If you go to It's About Damn Time with no www, It's About Damn Time by itself.com/VIP. I just announced it yesterday. It's already like 600 people have signed up, like in less than 24 hours. And I don't have a limit to how many people can sign up, but we do have a limit on time because it starts next Wednesday.
So this is the mastermind.
This is a mastermind for It's About Damn Time, but it's free. Right. Usually they're, you know, hundreds of dollars or thousands of dollars.
Yeah, it's like having a workbook and a tutorial that you have alongside the book, but it really creates accountability and some action items and helps people walk through the next decision on their entrepreneurial journey.
VIP, yeah. And not only that, it's with the author. So a lot of times you'll have these things come out and you can download it themselves and you can kind of do it self-paced, which is fine. But I said, I'm going to put an hour per week for 8 weeks starting next week. I'm going to be online like this for an hour. We'll, you know, try to contain it for an hour, but we're going to, and not only that, you're going to get to meet so many people and do breakout rooms and all sorts of things that we're going to do. It's going to be great. Going to hold each other accountable. And I think when you're finished with it, it's itsaboutdamntime.com/VIP. Like I'm a VIP, very important person, like you are. at the end of it, I hope that people can go and say, okay, well, I want to just pass this on to other people, and I just want to help them go through the book. And because we're already, it may, if you've never heard of me or you've never read the book, you may think, why is she doing it like that? In the last 3 weeks since it's been out, I have had people say to me that their entire lives have changed, or that their entire way of their doing their business has changed, or they have figured out a way to save their company or what by reading the book. So when I get that kind of feedback, I know it has to get out to more people. And that's what we're doing with this.
Let me cut you off because we're just about to run out of time. And I want to ask you from the audience one or two questions. So Jay Newman says, I'm interested in your views on two key growth financing needs and concerns. Do you invest in companies which have been financed already by angel investors or along with angel investors? And two, how do you see the interest of institutional venture firms in providing growth financing on top of your firm or on top of angel investors?
Sure. So we absolutely invest in companies that have been invested in by angels, and we also invest in companies that have been invested in by crowd equity, which is not, you don't always find that. And we help you where we can. We help you kind of get over the hurdle of talking to other investors about that and kind of get them a little bit more at ease about it, because we don't think that it should just be up to these few VCs who deem you okay to invest in you. We want the crowd. If you can get a crowd to invest in you, that means something to us. And we have several companies to do that. So yes, angels, angel groups, etc. Institutional. What was the question about institutional?
So how do you see the interest of institutional venture firms in providing growth financing on top of your firm? And do you see institutional firms shy away from these situations or require buying out or cram downs or earlier investors?
I think so the question, I think they're saying about their own company, are they talking about venture funds? That's why I'm just having a hard time.
I'm not completely clear about it. It says, how do you see the interest of institutional venture firms in providing growth financing?
I'm going to answer a question. It might not be the right question, but I'm going to answer it. A lot of times our LPs and LPs that are outside of us that we just interact with, they absolutely want to have more allocation into companies that their fund that they've invested in has allocation in. That's like, for a lot of LPs, that's the hugest draw, is you put in $250K at this valuation. I want to be able to, in the next round or the second round, I want to be able to double down on that personally, because then those returns it's a different return profile. If you put $250,000 out of a $25 million fund and it does really well, it's good. It goes towards the 1X. That's great. But if I'm an LP and I was able to also put $500K either alongside that or in the next round, I may get 6-10X on that same kind of valuation. There's a liquidity event.
We are running out of time, and I apologize, but just fascinating to have you, and I thank you so much. For those of you who want to buy the book, again, it's called It's About Damn Time by Arlan Hamilton. You can go to it'saboutdamntime.com and find more information on the book. And the first two people who send me an email, either NH@Sutton Capital Partners, I will send you a copy of the book. I urge you to read it. It's really fascinating. And I thank you, Arlan, for what you're doing. I thank you for making change. And I thank you for being authentic and true to your vision. And I wish you great success. You already have that success. And in finding great founders and innovators. So thank you for joining us. And to all of you, you will receive a recording of this webinar, and stay tuned for next week's. Tune in next week to hear Ben Narrison from NEA, again on our ongoing series of the Mindset of the Investor. And I wish you all well. Thank you. Thank you to all of you. And again, Arlan, thank you for being with us.
Thank you so much. Thanks everyone for being here. Thank you. It'saboutdamntime.com. Someone said it's the best purchase of 2020. I have to agree with you. It was the number one. It was the number one venture capital book on Amazon, new release a couple of days ago, and I'm so grateful for that. So check it out.
Congratulations. Bye.
Thank you very much.